Morning, good afternoon, good day. Today is Wednesday, May 7th. We have with us Jake from Wintermute. Welcome, Jake.
Hi guys, good to be here.
Yeah, thanks for joining us. We also have joining with us again our very own in-house TradFi boomer and everyone's favorite Voltard, Marty, the one-man party.
Thank
Welcome,
you.
boys. Welcome, boys.
Hello.
Jake,
Happy
for
to
those of you
be
that
here.
don't know who you are, what Wintermute does, you want to give a quick, 1 minute spiel on Wintermute yourself, and then we'll just kind of dive into chatting about the markets.
Yeah, absolutely. I mean, I sort of been in prop seats my whole career. As soon as I came out of uni, got a seat on sort of what you would call the pure buy side. As most people know it, I was straight into a sort of derivative trading, global macro seat. So we were trading vol alongside other derivatives, specifically around like events. So maybe that was, I don't know, your OPEC meetings, whether it was a index rebalance, whether it was an earnings announcement, we trade the underlying indices, or a central bank meeting. So I think you become very, very sort of attuned to trading, I guess you call like volatility in volatile markets, just because that was when we were sort of really, really getting active. That naturally obviously leads you into where the volatility is. And at the time, and I guess you could have said up until maybe the last 3 weeks, the volatility has felt like it's always been in crypto. So I remember finding the asset and looking at sort of what at the time was like an 80, sort of 90 vol, sort of this beast of an asset that you could trade and you could do decent size in, and then got super interested in that. Did your classics of trading the vol spreads between sort of CME, Deribit at the time. Then you go do basis trading, and there's just so many amazing opportunities. And I joined Wintermute off the back of a lot of the sort of non-directional trading I was doing. And my sort of main mandate here is helping to build out and grow the OTC business. A large part of that is obviously spot, just because of our law and where we've come from, but the growing book of derivatives business is heavily dominated by options, and they're not just traded on exchange. So Deribit, CME, we're even active on Eurex, but also growing sort of bilateral business where we're trading these products under ISDA. And yeah, sort of good seat to be in, lots of coverage there.
Oh, that's great. I guess my first question is, when did you make that transition? When you said you made the transition from TradFi to crypto, but kind of what year was that?
Yeah, so I mean, I started 2016. I spent, I guess, the first, you could say, 4 years solely in trad, i.e. just building a book around that. Then found a few little things that I was doing in crypto, and slowly got given more limits that were still sort of wrapped into, I guess, a sub-foot pocket. Very, very slowly managed to bring some of the stuff into the fund where I was at, whereas the rest of it clearly sort of sat outside it in a PA. That then started this sort of, I guess, exploratory phase. And then I joined Wintermute last March, just before we took the all-time high. So my first week here was all systems go pretty much. And it's been, I guess you could call it, pretty full on ever since.
No, that's huge. Yeah. And I guess for some of the listeners that don't even know what OTC means, it's over the counter. And I guess you guys are mostly doing spot, but are you guys also pricing out different structures for treasuries and traders that want to put on some mega size?
Yeah, exactly. I mean, like historically, we off the first product that Wintermute was super active in, and obviously the low hanging fruit at the time, back in sort of 2017, was the spot market. We grew that business. That franchise is obviously a huge amount of flow that we're still doing, somewhere between 10 and 15% of daily volumes. That's oh god, that's my Bloomberg going off in the background. Let me just turn that off. But yeah, so then off the back of that business, we're obviously involved in sort of the LP side of things, which opens up a lot of sort of project treasuries. A lot of those are wanting to sell sort of cover calls and generate yield. And that was, I guess, the easy way into trading options. So yeah, I mean, the main flow that we have different subsections of the market. We have, I guess, your large holders, whether that's a treasury, team members, VC that are sort of constantly looking to generate yield on otherwise dormant assets. So that's obviously one side of the business. You could call that sort of the overwriting side, and then on the I guess the guys, the vol buyers, you then have, I guess, your directional funds who have a specific axe. That axe doesn't always have to be, I guess, directional in terms of sort of deltas, but it can be directional in terms of taking a view on the vol surface, like as an outright. It can be a vol spread. It can be all sort of weird and wonderful things. And then I guess you then also have you would call them sort of more crypto native funds who are just using this as an asset to get leverage, and they then sort of lean your calls, call spreads, often not just in sort of, you call them at this point sort of the commodity business, which is the Bitcoin, ETH, even Solana, but then sort of going out sort of into the tails a little bit more into, I guess, your higher vol assets where I guess people see a little bit more edge.
Do you guys tend to solicit people for business, or do they tend to come to you with their wants and needs, and you guys try to like form around what it is that they're looking for?
I guess most of our touch points start on the spot side. That is naturally where we're always gonna be. I guess that's the easy low hanging fruit again for people we're chatting to. But I guess what we're seeing is that, especially on, I guess, the guys that are doing size in this market, like a lot of them used to or still do trade a lot of spot. So naturally it's a conversation of, okay, you're getting great spot pricing, what else can we do? And then they're sort of asking, like, are you trading some of the vol products? The answer is yes. So yeah, they tend to be the conversations.
So
Or
it kind
it's
of
like,
evolves, right, based on just but the entry, you're saying essentially like the gateway drug, right, is sort of just the spot market, and then everyone kind of evolves from there, looking for
I think it has been
different exposures.
It definitely has been historically, right? But then I guess if you come down to, okay, someone's long a boatload of spot, then it's like, okay, we've just been through a big drawdown. I don't want to feel like that again. I want to be able to sleep at night. How do we hedge some of this? And that's naturally, I mean, options in trad are often coming from a place of how do we hedge this? Options in crypto, I'd say up until this point, have been just how do we get more leverage? How do we speculate? We are seeing that changing slightly in terms of people coming in and wanting to actually use these products to hedge and build interesting structures that may lean on little quirks in crypto, like, I don't know, the persistent call skew, for example, that we're now seeing people get a bit, you could call it sophisticated around how they're trading it. But I think it's a large part of the different counterparties that are stepping in and are getting the mandates to trade this stuff in size, and that's naturally how things sort of flow through, right? And how all these things develop.
Would you say a lot of these people coming to you guys are more like TradFi native that are dipping their toes into crypto, or more crypto native firms that are just starting to evolve and get bigger and bigger in size?
I think like the latter subset, i.e. the crypto native firms, we've always had a huge sort of relationships with, and whether they start as venture funds from the last cycle, or you had that really amazing vintage of venture funds who are now grown to a size where they're now launching like liquid books and things like that. So you have that side that they're growing much bigger. And then, yeah, of course, you have these guys coming over from trad who just see it as another asset class. Interestingly, I guess like myself a little bit, like, first of all, the macro guys got involved because it's just an extension of a liquidity play. Then you got I guess at the same time, even you sort of got the commodity guys and the FX guys who were like, oh, maybe this trades like a commodity, maybe this trades like an FX market. But now I think what's really interesting is you're getting like more and more equity guys coming in and being like, oh, this is really cool. We can play like all of these strats that we've been doing. Maybe it's sort of momentum, maybe it's like delta neutral sort of cross-sectional trades, and they're going, oh, there's this amazing universe of assets. They're all actually pretty liquid, so we can just do the same strats and we can probably have a high sharp, and that's bringing all these guys in. So yeah, the market's changing, and the more it changes, the more we're having these conversations with, I guess, guys coming over from trad, whether they're coming over with a brand name already, or whether they're spinning out and running their own shops, raising their own funds. But yeah, I think the directional travel is definitely set there.
Now, did you guys see any shift happen during the election period in the U.S.? I know a lot of desks here were very hesitant to do much of anything, right, until post elections, and then you kind of see a lot of people talking about just things moving again, right? Getting unlocked, especially here. I'm just kind of curious how that has worked for you guys. Have you guys had interest in jumping into the US markets? Has there been any flow changes significantly from like a macro level that you guys have noticed pre and post election? How have you guys kind of seen that stuff evolve over the last few months?
Yeah, I think definitely like in the build up to the election, it was almost like we were in the period where it was career risk on all sides of it for people who were getting involved. And that career risk was not just, okay, what if I buy this and it goes down? Or what if I don't and it goes up? It was also, what if I get in and there's a really, really hostile administration that comes into office? So that put off a lot of decision making, especially for, I guess, big sort of regulated firms that were just like, it's not worth them stepping in and taking that sort of risk, especially when maybe the bulk of the business was in other assets. As soon as the election went through, I guess a lot of these as well, like in the build up to the election, there's conversations that had been ongoing within Wintermute with some like sort of those kind of counterparties that had been going on for in some cases a couple of years, but there was just no regulatory clarity. So that just opened up this amazing pool of capital really. But I think like in terms of the flow was definitely into Bitcoin, into Ethereum, some of it initially into Solana, and a lot of it was definitely pretty mercenary at the start. And by that I mean like in the build up to the election, you got all these like all the sell side, all the big banks, your Goldman's, your JP, like their election trades that they were putting out to clients was, okay, Bitcoin is probably a really pure form of the Trump trade. And that's when we saw ETF inflows. And then you saw obviously like people that were on or watching it evolve sort of knew that actually there's someone sat on the other side in a basis trade here. But a lot of the market didn't cotton onto that until it started unwinding, I think. So that was like an element of the flow that I thought was quite interesting, that people were taking different signals than they had before, or looking at like ETF flows in isolation, not realizing that, okay, there's just a really solid trade there for anyone who's used to grinding out, I don't know, 6 or 7 or 8% in the SPOOs. And they're now getting like north of 10 on a sort of, your downside is counterparty risk. And that's a no-brainer. So there's a lot of that going on in flow. I think naturally when people are getting in, it's slow moving in terms of top down from a liquidity perspective. So you're looking at Bitcoin, they're looking at ETH, they're then looking at maybe a Solana, a Ripple, these things that you can get a lot of size in. Even Doge, for example, we saw a lot of activity there because
just moving along the risk curve, essentially, right?
Exactly. Yeah. Moving along the risk curve slowly, but on a liquidity basis, because there's
I assume
different
do you think that's a product? Yeah, do you think that's a product of like yields potentially just compressing as well, right? And so at some point, I imagine, especially from I mean, I haven't seen any crazy funding rates at this point, but it does seem like there is a compression of yield out there.
Basis was 4% 2 weeks ago.
Yeah, like in crypto, especially when the market's heated, like you're
From
not
30.
seeing the outrageous numbers that you did before, right?
Yeah.
The free money of like 25% annualized for like months on end. Yeah, it's not there, which is interesting. And a lot of times you'll even see, when spot drives, you'll even see rates go negative, right, on funding while the market's rallying. So that's been sort of an interesting shift in like the market dynamics that I've been noticing. I'm kind of curious, like, are you guys kind of seeing the same thing with like the yield? So however everyone wants to define the word yield, it seems like generally speaking, it's compressing across the board, and then that's causing people to kind of go further out on the risk curve.
Yeah, no, I think that's definitely right. Especially since IBIT options, for example, came over, and things became a little bit more sort of capital efficient. I think that's allowed a lot of the people who wanted to become active there. You can also then obviously buy the underlying ETFs, dock it with a prime, and although you do get a haircut, you can still do that trade. So a lot of this stuff is pressured the vols. Not the vol, sorry, the basis, and then
premium,
people have, but then that's why I think now people are leaning into the vols, because you're still looking in, like, if you still look at the Bitcoin belly, it's still 42 vol asset versus like your equivalent, which in trad is the S&P, right? So we think, oh, it's crushed. If you're looking at like what SPY, I think, I mean, like for example, the VIX is what, like 24, I think today, like, and Bitcoin's trading 42. So if that's your point of reference, you're looking at Bitcoin still and being like, oh yeah, let's go. Like this looks really good to sell to generate a bit of yield on. So I think a lot of that's been happening. There's also, like, because you can't get yield as much from the basis, people have been, like, there's a lot of structured products that seem to be getting a little bit of traction, which up until this point, that market has been relatively slow and fairly isolated and based out in APAC. There's lots of people, conversations happening with like distributors, that is an element, and people are seeing demand there. And obviously that again leads to sort of constant overwriting flow, which, because they've gone off the basis, they're going to have to look for something else to generate yield. So yeah, I think that's a big part of the market at the moment. And obviously, again, like you're seeing it in Bitcoin, but we're not really seeing it yet in ETH. That's staying a lot richer, although obviously you can explain a little bit of a way with sort of realized printing way higher. But I think there's a lot of element with the structural flows on that side aren't yet there. That would be my sort of take on what we're seeing at the moment.
Let's talk about that for a second. Why have you guys have any? I mean, there's a lot of head scratching that's gone on that I've had in terms of conversations around the adoption of ETH versus Bitcoin, the usage of ETH, its integral part in terms of just general DeFi and stablecoin networks. And it just seems a little odd to me that there just isn't that institutional flow that might be coming through there as much as Bitcoin. Is it just, do you think it's because of the simple narrative of people can digest digital gold and it's just that simple and they can't understand ETH? Or are you guys seeing other reasons why people are a little bit immune to kind of jumping into the ETH market?
Yeah, I think if you think about like the crypto native side, it's easier to answer that question in terms of people don't feel like it's an asset that has a real, like your narrative just isn't there. Like the ultrasound money thing doesn't really hold up in court. People are just seeing like that as like a perpetual slide against Bitcoin, and at some point that trade will reverse. Like we've seen these reverse, like any trade that's gone straight down, it doesn't go straight down forever. Like there's going to be some real rips at some point in this, but that narrative in itself is a bit of like a brand crisis. I think that's been the overwhelming view from counterparties we talk to in the crypto native space, and it's almost like perpetuated into like a bit of a joke, right? You go on Twitter and everyone's talking about ETH, and that's sort of self-fulfilling. And then on the trad side, I do think it's just Bitcoin is such a simple narrative. You also remember that you've got like Bitcoin has done very, very well, not only on its own merit, but there's these real structural flows in Bitcoin. The supply is capped. At the same time, you've got Sailor mopping up whatever they can, and there's real buying on the other side of that. It's not just, I don't know, it's not just like someone's buying to puke it a little bit down the line, like a week later. It's like someone's buying that, like they're issuing bonds, someone's buying the bonds or the stock, and that's allowing them to keep doing this. So there's real demand somewhere for Bitcoin. And now I think we're seeing more and more treasuries step into that space, and they're doing it in size. We're obviously starting to see that now in Solana as well. So yeah, I think that's going to be a large part of the structural flows in the industry. But the best thing about Bitcoin for that kind of flow is that you know what the cap is, so you know the supply. That side of the equation is done. So if you can work out the demand side, ideally over a long term, you've sort of halfway there. Whereas with ETH, it's a bit more unsure. so with some of the others, like there's supply unlocks and all of this and the overhang. So I think so long as that's going on, it's pretty clear where institutions are going to go first.
You
Yeah,
mentioned
somebody
Sailor.
from the ETH Foundation told me ETH was meant to be sold. So that was a fun one. No, and I think you just see
They're
it,
very
like,
good at
proof
it,
is in
don't they?
the-
They pick the tops, don't they?
Yeah, they pick the tops. The proof is in the pudding, right? Like ETF total inflows for ETH is 2.5 billion. Total inflows for Bitcoin is almost 41 billion. So I mean, it's right there for you to look at it. Like, which one has the most inflows? And just because it's a tradable product doesn't mean that it goes up forever. Sure, there's some building of structured products and more products to sell to people that are willing buyers, but just because it's tradable doesn't mean it goes up forever. Like, we're going to see Solana ETF, we're going to see Doge ETF, we're going to see all of these variations of all the way down the risk curve to shitcoin ETFs probably, and probably even baskets. And I'm more curious. It was funny that you said about structured products, because like last year or 2 years ago, we were on a structured product hype, interviewing a lot of people, had a few people on the show that were doing structured products. We even had some of the sexes on talking their earn structures, their earn platforms, and it just never caught on. I mean, I was even talking to Swiss banks, like, I guess it was Seba Bank, but they rebranded now. But like it wasn't dying. It's just like it never caught on. And I think part of the reason was that options in crypto, let's just say Deribit, were 1 year out. And now on IBIT, you have 2-3 years out. So you're able to build out these more complex structures. I mean, I'm more curious to see what kind of structured products, like, are they like super light? Are they doing like principal protected notes, or are they doing barrier notes? Like, what kind of flows are you seeing on the structured product side?
Yeah, I mean, like the PPNs, I guess, are always going to be the easiest ones to sort of get people on board with or explain, because they are well known in other markets. We've also seen demand for this is not something that I think is a great product at all. But I mean, there was a fund that launched in the US, which was sort of doing the riskies, but super tight. So you basically got no upside. And I can't even remember what they were trying to brand it as, but it was like it was just like your part principal protected, but you're capping your upside. They're basically just selling like monthly riskies on Bitcoin, but like really, really tight. So you're not really getting anything out of it, and they've just productized it. That's the sort of innovation, you could call it in quotation marks, that I don't think really adds too much value. But yeah, I think the PPNs have a place, especially like family offices, large buyers that want to put some capital to work, but they don't want the downside. They want to take advantage of an asset that has a little bit more vol. I think that's your natural first step. But I think you're right in terms of it's been a slow take up, but because of that yield component now coming down, it does make sense for people to look elsewhere, especially when they can't just do it and warehouse the ETF and the sort of CME future on their own books and get the same yield. So we are seeing some of that. There is some stuff we're doing or in conversations with, which is very similar to sort of PPNs. Again, that's going to be like your first port of call, whether it's a PPN with a sort of additional kicker on the downside or an upside kicker. Like, they're fully sort of flexible, but they're conversations that are having at the moment. But yeah, I think they'll probably, we thought early 2025 was when we would see it, as in earlier this year, but it does now feel like that demand is kicking up a little bit.
Yeah, mostly around bases being dead. I mean, we talked to some of the largest shops on the fucking street, and all they were doing, the smartest guys in the industry, teams of 10, 20, 30 people, and they're putting yards of capital to work in basis when basis is 15-20%. Sure, it's super easy when you just click a few buttons and hold it till expiry, then roll it. But now when you actually have to work, it'd be interesting to know kind of where that money's moving around.
Yeah, I think definitely options are a place where we're seeing it go. But I think like the people who were doing, like you said, like these, you've got teams of guys maybe in a fund they've raised maybe 50, 60, $70 initially, and they've just done the basis trade and they've done really well out of it. Now they're having to look at other avenues. That's got them involved. That's allowed them to put the infrastructure in place and actually explore other areas of the market. And there are a huge amount of different niches within crypto that look like old TradFi trades. They act like them, but they're a little bit different, and there's always different sort of niches there, mostly built around different markets, microstructure that I think still exist, and that's sort of where people are playing at the moment.
Yeah, I'm curious to know about, like, I know you guys' main business is spot, but also like altcoin OTC deals. Because every time I've gone to an OTC deal for altcoin options, I know something. So I, I know something that's coming that most of other people don't know, and it's either some movement on chain that you can follow, or the foundation hired somebody new. And I'm more curious on how you guys house that sort of risk, and without going into your pricing models, how you sort of price those, 300, 400, 500 vol asset, like a bonk or I don't know, some other shitcoin. I'm more curious on how you guys price those altcoin vol.
Yeah, I guess like there's a couple of ways to look at it, right? Like those things are always going to be priced much richer than realized naturally. There's obviously different issues, or you can't lean directly on the vol surface that's given to you by Bitcoin and Ethereum, because they don't hold up when you look cross asset as well as they might do in, for example, the equity markets. It's also then a little bit more difficult because, as you said, like there's maybe if you narrow the universe down to what people are actually trading vol on, you're probably landing most of the time in the top 30. Then especially where people are wanting to take actual delta risk, and that often then is a bit easier to price than if you're going right into the tails where people are just asking to come and they want to sell cover calls or something. That's a little bit easier. A lot of it comes down, obviously, as you said, like there's always the element of what don't we know. Generally, what I found, which is very different to TradFi, is that in Trad, everyone is trying to claw each other's eyes out. In crypto, it's a small industry. Everyone knows everyone, especially if you're trading with someone who's doing big blocks of these alts. If you get your eyes clawed out on something like that, you'll not trade with them again. They'll be classed as toxic. Arguably, other people will know about that as well. So it is much more collaborative in terms of, okay, if you're going to do a big size ticket in this, I don't know, let's take it like you mentioned, bonk or something, and someone's doing a big trade there, you have to basically work with someone to get into it. You have to work with someone to get out of it. So it's more of like a two-way relationship than in Trad, where I found it very, very transactional. And it was sort of dog eat dog, zero sum. It does feel a little bit less like that. Whether that will keep its charm, I don't know. But when it obviously comes to the pricing, you've got to look at the sort of realized. Mostly you can't sort of lean on anything else but sort of the hedging the deltas as well, right? So you're going to be compensated for taking that risk. But yeah, there's always little idiosyncratic elements that you obviously have to try and do your best to research and be aware of. But I think we're in a great spot in terms of, because we do so much spot flow, we do tend to understand sort of what's going on. Obviously, you can't look at absolutely everything all the time, but we wouldn't take down sort of a big chunk of change if we weren't super confident with the risk. And that comes from, okay, if I don't know, maybe one of the other 30 guys that sits on the trading desk does. And that's not just covering CFI. We've got DeFi guys as well. So if something's happening on chain, we're probably going to know about it. Especially if someone comes in for a big trade, then it's like, okay, let's work out if we're putting ourselves at risk, where should we be pricing, etc. So yeah, I think it's a different approach, but yeah, it's definitely an interesting piece of the puzzle.
It's a good point about like the reputation element. You get blacklisted pretty fast, right, in our industry.
Just scumbag trader, just
yeah,
straight scumbag.
You'll lose flow real fast, right? The moment you do so. I mean, everyone talks with everyone, right?
Yeah,
like you said, our circle's actually smaller than we think it is.
It is, and I think it's a blessing and it's a curse. Like it's a blessing because it's great. Like, everyone does know each other. Like you go to a conference and you sort of see people you're trading with and other people that are trading with them, and you know that someone's like, if you're quoting someone, you sort of can work out who the guy on the other side is also quoting them. So it's all quite like collegiate almost. But then I guess where it becomes a headache is for those people who are coming in and trying to run the guys over, and that's when for them it's obviously a headache. Not for us, it's great for us, but it's for them trying to run people over. If they do it once, it's very unlikely they'll be shown a price that is in line with what you'd expect if it wasn't sort of toxic flow. So yeah, it's very sort of two-way relationship driven market.
I have a sailor question for you. I'm not sure how much you guys are allowed to discuss, but or how involved you guys are. But I'm just kind of curious if you could walk us through maybe some of what you see from like the sailor effect. I know he has a tendency to discuss whether he's buying or not on Sundays. His prices are quite questionable of how he gets filled. I sometimes I don't even know where he got those prices from. Um, do you have any insight? Does he do any sort of like predefined like TWAP structure that like everyone's sort of aware of? Is there a point at which you kind of see the flow come through? Do they contact you? Does he have people contact you directly? Sort of how does he source his liquidity for the size that he continues to do? Because a lot of people kind of um, bring that up as who's the counterparty to him constantly. Who's got these massive blocks that can get off size for him week in, week out? Um, does that have a relationship with the balances on sexes? Because there's obviously or is that just strictly an ETF thing? I'm just kind of curious how you sort of see the macro like spot environment for BTC, especially with Sailor Run.
Yeah, I mean, I can't really talk too much to the Sailor point directly. Like the reason being is obviously, even if we were seeing it, we wouldn't be able to disclose anything about it. But the reality of that situation is that a lot of our counterparties outside of the ones that we know really well and we trade with and we've been trading with a long time comes through, I guess, different broking channels. So a lot of the flow we do see will be, I guess, unnamed in that regard. So it's anybody's guess a lot of the time. So you never really know where it's actually coming from in terms of where it's originating outside of, okay, there's a KYC'd entity on the other side, they've KYC'd their counterparties, and then we end up obviously showing prices through an RFQ or an API platform. But I guess the standard, if you're doing big blocks of Bitcoin, for example, I mean, most of these, a big block in Bitcoin nowadays is probably anything north of like, I don't know, 100, 150 bucks. That's when sort of pricing gets a little bit wider. We have priced and we've traded stuff way north of that, just on a risk price basis. Normally what happens is if you're showing prices definitely from anything like 150 plus, people would also want to know what's it going to be to TWAP it. When you start leaning into those larger sizes, there's a lot of counterparty risk, there's credit discussions, there's how do we make sure that we're not exposed, how do we, the counterparty on the other side is also has the same, not reservations, but same considerations when looking to expose themselves. So the settlement issue is often the main driver of how we do it, whether it's pre-funded most of the time on a big block like that, definitely if it's risk price, or if it's TWAP'd, maybe it's settled as you go along to keep it running. But there is so much volume being done in Bitcoin that you could probably do like these blocks that they're doing, you could easily do. And yes, it's going to have an impact on the market, but they're not like hugely problematic, and it's not like, oh, someone would have to drag that out over a week or two, which obviously I think a lot of it does get really dragged out, but I guess that's more of a function of them wanting to not sort of pin a certain price and just try and average it out. Because I guess if you're holding it for, if you're planning to never sell it, you're not going to be super bothered about hitting like, I don't know, 95, 250 or something. You're just going to be, oh yeah, let's just start the program. And I think a lot of it, and with a lot of the corporate fundraisers that are going on that then find their way into the market. A lot of them will be based on underlying demand. So it might be like we've seen some propensity for people to start talking about like when these bonds settle, for example. Okay, there's probably going to be some flow hit the market or start to hit the market as soon as the bonds settle, because there's like regulations about how long you can hold the cash because it was raised to buy Bitcoin. There's things like this that obviously are gonna people will be way more attuned to that if they're like, I don't know, equity or bond guys who grew up in that environment. But I think now people are sort of becoming aware of that. I don't know if there's much edge in following it, just because it's sort of probably, I'd imagine, has been sort of arbed out at this point.
It's just been interesting, the mechanics, because I think the mechanics of it are a little not as transparent, right, as you would normally see in crypto in general. Things are very transparent in crypto, so to see like a lot of these flows kind of not as public or viewable is an interesting dynamic. Do you guys have any metrics on sort of like how much OTC volume there is in general? Maybe something you guys do in-house for yourselves, or like how much volume do you guys kind of typically see in the spot side for like BTC?
Yeah, it's a good question. I mean, we have internal estimations of where we think we are on a market share basis. It's always hard because like a lot of flow, if there's a big trade, for example, maybe it's done and settled post trade on another desk, so it's hard to then like pinpoint any exact when that was done or who did it. So it is very hard. We can sort of estimate the proportion that we are of the market and extrapolate it, but you're talking low confidence on what the size of that is. Definitely the big blocks that are being done are not just being hit on exchange, outside of those big ones that everyone hears about because someone's just whacked through a book on XYZ and it sort of spiked the price. A lot of the time, I think the reason people use an OTC desk is that the price impact is, in 99.99% cases, going to be a lot less than if they just send it into a book or even TWAP'd, and that's just the nature of the offering. We're obviously working out of trades, of positions. If we take on a position on a prop basis because someone's passed it or the market's passed it to us, we're taking our time to hedge out because we're incentivized to not push the market and sort of retain as much spread as we can. So that is always a consideration. That naturally leads into, it's very difficult to even know if there's an OTC trade gone on in a market unless it's come up on chain. And often when it's on chain, sometimes it's after the fact because maybe someone's extended a credit line, etc. So yeah, I think it's
like a murky
any
number
OTC
to try
market.
to pinpoint. Yeah,
Very, and I'm not trying to sort of talk around that. It's just like,
no, I figured it was
for
going to
us,
be the answer. Yeah,
even for us. But I mean, we're doing, and I think, I mean, the numbers on our website are public, but we're sort of doing sort of north of, I don't know, 15 bill a month of that kind of flow. So I mean, it's we're a part of the market, arguably a large part of the market, but we're still a big part of the market. Yeah.
Well, I don't want to take up too much of your time. I know we got FOMC in a minute. I mean, I think it's 98% no change. ETH is nuking into the event 1808. Bitcoin is holding its own 96.6. I mean, as we always do, we have a gun to your head moment. End of the quarter or end of the year price predictions. I prefer end of the year, but we won't hold you to it, but we will clip it and put it on Twitter. What do you got for end of the year price predictions? Bitcoin.
Where did you say
Bitcoin? Just Bitcoin.
Where did you say Bitcoin? 96.6.
I'm on Vertex. Just looking. Bybit is 96.545. So there's $100 difference there.
What if it never moves ever again? It just stays here for the rest of the year.
I was there. I was there. 100
Pain.
to 120. I was there this year.
Yeah.
100 to 120.
Right below 100.
No, I mean, like I am into year end. Like I think once everything, like in my opinion, like once everything gets ironed out with trade and there's a little bit more of sort of the macro thesis on the table, I do think there's inflation is potentially the short term hiccup, and by short term maybe for the next couple of months. I think now people are probably getting a bit tired of the tariff talk, and we even saw that from the reaction overnight, right, on this positive tariff headlines. We've then sort of sold back off slowly. I do think the next move is going to be from the real economy. Short term, I don't know if that's a great thing, but I think ultimately all roads lead to more easing. We saw it in China already cutting the triple R. The Fed is going to cut rates. It's just a case of when. People are just now, it's like a meeting by meeting decision now. So if they're obviously not going to cut today, whether they do it the next one is then the next discussion. And then, okay, if they don't, so it's June, then September, right? So like if they don't cut next time, they'll just cut the next one. And I think that's just going to be the case into year end. And as soon as you get on that sort of fast money, you also have like, I don't know, not to go too sort of Arthur Hayes on it, but I think he's really nailed it in terms of like the SLR. That's a big, almost like a QE sort of kicker. So you've got all this stuff going on in the background, but tariffs has been the elephant in the room. Once that gets marched outside, then I think we can focus back on the other stuff. So yeah, I'm pretty bullish. I would be very surprised. You can clip this if we don't take the high by year end. I'll eat a hat.
Look, I'm no
I was about to
tariff
say
expert,
we got to
but
give a hat out.
Yeah, we got to
Okay.
give to the desk. I want to see hats all for the desk. We'll get you a coat and get you some hats.
me and Marty say, you know, we're no tariff experts, but we sure know a lot about Biden overhang.
Well, yeah, that could be. We're in it's a Biden market today, right? And
Yes, of course.
down 50
Yep,
bips. So yeah, Biden market today. We'll see where we're at tomorrow.
Alrighty, Jake, Tolga, Cozy.
Yeah,
Well,
Jake,
pleasure.
really appreciate your time. I know you're a busy
Yeah,
man,
thank
so
you.
appreciate you taking the time to hop on with us. Tolga, always a pleasure seeing you. I'm glad you've been making
Yeah,
more
it was
appearances.
nice.
And Marty, I'll see you back on Friday. Thanks everyone for
Friday.
joining us. This
Great.
will be
Cheers, guys.
live on our YouTube channel. For those of you who caught us at the end, who want to catch up later, go to the @Premia Finance YouTube channel. You'll see it live there as soon as we end. Later.